dominance of companies like Asian Paints and Berger Paints in the paint sector in India could face a significant challenge due to the entry of Grasim Industries, the flagship company of the Aditya Birla Group, into this sector. Grasim here aims to start earning profits from the paint business in the next 3 years. Now the question here is, what impact will Grasim's entry have on other companies in the paint sector? Will there be increased competition in this sector? And most importantly, should one consider investing in the paint sector in this changing environment? And if so, in which shares? Let's understand all of that in this video. Now, going 30 days ago, or going about a month ago, on February 22, Grasim Industries, a company of the Aditya Birla Group, entered the decorative paint business under the Birla Opus brand. The company has initiated the setup of 3 paint manufacturing plants in Panipat, Ludhiana and Cheyyar, Tamil Nadu, entering the 80,000 crore rupee decorative paint market. Birla Opus products will be available in Punjab, Haryana and Tamil Nadu starting from March, which is this month, and while by July 2024, these products will be available in all cities with a population of up to 1 lakh. Now, back in January 2021, the company announced its entry into this business with an investment of 10,000 crore rupees. Now, over the next 3 years, the company aims not only to generate 10,000 crore rupees in gross revenue, but also to establish its presence in the industry by producing products equivalent to 40% of the entire sector's capacity in one go. By the end of FY23, the size of the paint sector was 62,000 crore rupees, with the top 5 companies holding approximately 90% of the market share in the organized sector. The top 5 companies had an annual capacity of around 42.2 lakh kiloliters by the end of FY23. Investments of around 20,000 to 22,000 crore rupees are expected to be made in the industry over the next 3 to 4 years, with Grasim Industries investing 10,000 crore rupees in Asian Paints 8,750 crore rupees. After the capacity expansion is complete, a 20% increase in the overall sector's capacity is anticipated. But how will Grasim's entry impact the paint sector? Well, speaking on this, K.M. Birla, chairman of the Aditya Birla Group, has set a target for the business to start making profits within 3 years. Analysts believe that the company's nationwide reach, significant capacity expansion spending, and presence in all types of products will boost profits and stir up the entire sector. However, brokers are maintaining their bullish outlook on the company even after this step. The company plans to start 3 more plants in Karnataka, Maharashtra and West Bengal in FY25, resulting in an annual capacity of a whopping 13.32 lakh kiloliters. According to broking house Prabhudas Leeladhar, the company's targeted production capacity exceeds that of the second, third and the fourth largest companies in the industry combined. Currently, with a capacity of 17.3 lakh kiloliters, Asian Paints leads in this sector, while Berger Paints, with a capacity of 12.72 lakh kiloliters, is the second largest company. Currently, Grasim has only spent 6,000 crore rupees out of its capacity expansion spending. What that means? Well, that means that it includes 60% of the amount. Now, speaking on this, Prabhudas Leeladhar believes that there could be an additional increase of around 40% in capacity expansion spending. Not only that, according to stock market expert Ambarish Baliga, paint manufacturing is not rocket science, but success lies in maintaining low inventory and establishing maximum reach in distribution. Asian Paints has excelled in this aspect, earning it a valuation premium. With new companies entering the decorative paints segment, smaller national and regional companies like Berger, Akzo Nobel, Indigo and JSW Paints might be affected because they may not be able to match the marketing expenses of Grasim in order to gain market share. But will Grasim's entry affect the margins and market share of existing companies in the sector? Well, Birla Opus has clearly indicated its intentions through offerings like a 1-year warranty on enamels, wood finishes, discounts for contractors, free tinting machines and 10% extra volume in water-based paints. Well, according to Prabhudas Leeladhar, this will increase sales and establish the brand. However, brokerage houses believe that after Grasim's entry, large companies like Asian Paints, Berger Paints and Kansai Nerolac might adopt aggressive strategies which could impact short-term growth due to high trade discounts and customer offers. It is advisable to stay away from the paint shares until the situation regarding Grasim's entry becomes clear. And regarding margins, Asian Paints faces more challenges as its margins are close to record levels, while Kansai Nerolac's position is better with margins nearly 4% lower than the peak. Similarly, in terms of market share, Prabhudas Leeladhar says that there is no threat to Asian Paints' dominance with a market share of 52 to 54%. This is because the company's strong network, brand strength, and presence in different price points makes its position quite strong compared to its competitors. However, based on Birla Opus's strategy, pressure on volumes cannot be ruled out. A decrease of even 1% in the company's market share in the decorative paint segment could have a significant impact on growth. On the other hand, Kansai Nerolac is seen as more prepared to compete due to the strong outlook in the industrial paint segment and land sales of 1,000 crore rupees. Looking at the third quarter results and Grasim's entry, most brokers are uncertain about sector leader Asian Paints. Except for Macquarie and HSBC, all other brokers are not so bullish on the share. This leads to questions on what should investors do. Should one invest in the paint sector in this changing environment? If yes, then in which shares? Well, the answer for that comes from Ambarish Baliga, who says that Asian Paints will continue to be the market leader in the near future due to its strong network. From a 2-year perspective, it is the right time to buy the share at every dip with targets of 3,900 and 4,200 rupees. On the other hand, there has been a decline in Kansai Nerolac as well. From a medium-term perspective, it is advisable to buy the shares with a target of 350 rupees as the impact of Grasim's entry in the industrial segment may be less and this share may bounce back the fastest. In conclusion, Grasim's entry has stirred up the paint sector. While it may take some time for the impact to be felt on companies, brokers are already influenced as seen in their reports. Therefore, until the situation regarding new developments becomes clear or stability is achieved, it is wise to be cautious about investing in this sector.